This is our Forex blog for October 16th, 2012. Hopefully you upgraded to version 4.295. This is the old currency meter, which we've, for the last probably 8 to 12 months, have been going over. It's the build your own trend, which uses multiple different time frames to showcase the real-time trend. Underneath that we have the 15-minute trend, hourly, daily, weekly, monthly. Obviously the more time frame trends that are going up or down, the more likely that currency is to be one that you want to buy or sell. The new currency meter, which we released yesterday, looks like this, and it's pretty clear. The new build your own trend tools have new options which allow you to weight some of the daily, weekly, monthly trend in there. I give the monthly trend because it's very slow in changing directions, only a 4% weight, 13% weight for the weekly, and more for the daily, 18%. Overall, the longer-term daily, weekly, monthly trend makes up about 35% of this weighting, and the real-time tools make up the rest. I weighed a little bit, 6%. What is the percentage of currencies over their 15-minute bar, 20-period moving average using the very fast DSP, digital signal processing. I also give 5% weight to the trend on the hourly. But overall, the majority of the time frames on this are very, very fast and very quick to change when trends change tools. So instead of having to look at all these different time frames and decide which ones you want to buy and sell, for new traders it might be simpler to just simply look at the currencies on here. You can see the Swiss is strong on all time frames, and it's crystal clear. It's even stronger than the euro, which is pretty much pegged to, but other currencies might have been stronger than the euro today, but they weren't stronger than the Swiss. The Swiss was one of the stronger ones. The New Zealand is very clear at 4. It's very weak. So what do you want to do? You want to sell the New Zealand versus the Swiss, or you want to buy the Swiss versus the weak yen, and it's that simple. It's crystal clear. It's almost impossible to screw this up. There's no analyzing multiple time frames, which some days, over half the days, 50% or more of the days, you might have the real-time trend up, 15-minute trend up, hourly trend could be down, the daily trend could be up or down, weekly trend could be the opposite of the daily, and the monthly trend could be the same or opposite of the daily. So what time frame do you look at? It's confusing to some new traders. If you're not visual, or if you're not mathematically inclined, you can look at the world in a 3D view, analyzing multiple different time frames and very quickly in your mind deciding which ones are the strongest, then this is going to be for you. It's going to be a lot simpler. The downside of this is it's a little bit slower in changing from an uptrend to a downtrend and a downtrend to an uptrend. However, trends don't usually radically change except during news times. You don't have a currency that's been going down all day and exploding up typically most of the time without a little bit of fighting between the bulls and the bears. So that being said, let's take a look at this and how to trade it and make money. The Swiss is not a pair that I typically leave running, and I certainly don't look at the New Zealand Swiss. So let's first bring up a regular chart, and in today's example we'll just use a 5-minute chart. Like I said before, the New Zealand, crystal clear, is very weak. It starts to get weak at 3, and it's very, very weak a little bit before 4. The Swiss is very strong from 1 o'clock onward, and it's stronger than the New Zealand is. So you can see this is one that you're looking to sell, and let's say you missed that first move down from pretty much 130 when this becomes super strong. Well, this one's relatively strong from 2. At 3 it loses some of its strength, and so basically from 3 o'clock onward you're looking to find a sell. This move really never begins until after 3 anyway. So you got that sell here, you got a little pullback trade right here. We have another rectangle pattern sell when it breaks the lows. If it goes sideways from 30 minutes to 2 hours, you break the lows. And this is the first move down. The second move down is a little bit less. Typically currencies move in at least 3 waves, so you short that second one and you have your profit target. I would have probably got out of this trade at the 1.618. Small profit on the second one. The first trade was the biggest, second one was the small profit, and the third one was the small profit. But that's how you do it. It's pretty much crystal clear. The New Zealand, again, very, very weak. The CAD's strong. So especially a little bit before 4, You can also sell the New Zealand CAD. Now remember, the CAD pretty much stays strong. Okay, I have this on the 15th. Today's the 16th. I have to scroll this over and make sure we're looking at yesterday's data, because I did yesterday's class. Let's scroll this over and we have today's data on here. So that's 16th. So I take that back. The CAD is actually weak today, and that's why it went up. So I apologize for that. 16th. To make sure I didn't have any other days back. The euro I do have back. Let's scroll this over. On my regular blog video for the older one, you can see they're all with red dots. And so if I scroll one of them back or forward, they all move. This new currency meter I just set up, and I didn't put those colors on there yet. So that's the reason for this. So 16th, 16th, 16th. This one here is scrolled back too. I apologize for that. It's very important. If you do scroll these back to reset them, move them over, or else you'll be looking at, like you saw me do, make a mistake. Most people just bring up the charts and leave them running. They don't scroll back, and if you color code them all the same and you click on this button right here called Demo Trade, when you move one of them back, they all move that have the same color. All right, so looking at this today, you can see the CAD is also quite weak today. And if we go look at the old one, you'll see the CAD's mostly weak. 15-minute, hourly's down, daily trend's down, weekly trend's down, the monthly trend's just slightly up. Remember, I only weight the monthly trend 4%, so that has very little impact on it. But it's crystal clear and much easier to just look at one reading here. You could have bought the very strong euro versus the CAD. Euro CAD is one that is going to be going up. And of course, that's what it does. And as you can see, when you buy a strong one versus a weak one, most of the time you're going to have winning trades. And the good part about trading in the direction of the trend is you're going to have significantly bigger wins than losses. Now, if you want to use this currency meter right there, it's already set up for you. Click Load. Go to Chart Examples, and you're going to see this new currency meter, sortable FX build a trend live only. And so I put a new in front of it so you know how to do that. And it's already set up for you, and you can put it wherever you want on your workspace. Now remember, the Swiss and the euro are pegged together, and so the weak CAD, you can sell the CAD Swiss. CAD's on the top in this one, and guess what? It's going down. And from the beginning of the day to the bottom, it fell about, it looks like 180, 182 pips. I'm sorry, no, 120, 122 pips. So of all the trades on this one, you have, and if you miss the first move down, which many people are going to do, you short it right there with your stop above the high. And I'm always looking at previous swing lows. If a currency breaks through a previous swing low, then can't get back above it, I absolutely love selling those. Those are very low risk, very high probability trades, and it's much more advantageous to sell a little bit of a pullback with a very tight stop than it is to wait and sell the low down here and pay down about 15 to 20 pips. But if you did miss that trade because it goes sideways here for 30, 40 minutes, another nice trade. There's no bounce at all. This is super weak. There's no one buying. It's crystal clear from bars that pretty much only go up or down 5 or 6 pips max, and then it just takes off. So you got one wave down, two waves down, there's a third wave down. And most of the time, the market's not going to go beyond the 2.0 fib level. If it shoots through the first one, you hang on to the second one. It goes sideways here, I would have exited half. Goes down here, I would have exited half, and I would have missed this remaining amount. But the third trade was astronomically big profit. And that's really the key. Another one that's weak all day was the yen. The up moves, you can see, have less strength than the down moves, and mainly because that's the longer time frame trend showing an impact on here. So basically, looking to buy the euro yen, we're looking to buy the Australian yen, and also to a lesser extent the pound yen. But the no-brainer trade is buying the euro yen. So here's the euro yen. And basically, like I said, there's two different types of trades we look at. We look for pullback trades, sideways rectangle breakouts. This one here wouldn't have led to too much. Here's a pullback that made money. This pullback here made money. Just phenomenal trades. And I'm always working on improving the FX trade signals. One new trade I put into the chart today would not show up on yours yet because you don't have this one, is this buy signal right here. Anytime the daily, weekly, monthly trend are all up, the currency's above the hourly, it's not up too much, not above the upper containment bands, and you get a 3-bar pullback with a little bit of a sideways rectangle pattern right here. That's a brand new number 3 breakout. If you click on it, you can see number 3 breakout up buy. And that's a new pattern that I put in there. And I also, if you look at your charts versus mine, there were some counter trend signals that were false and it didn't meet the criteria for a very high probability counter trend signal. So I put stricter code in there to get rid of some of those losing trades. Now, when a currency goes up, 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 typically it's going to need a little bit more of a pullback. If you start seeing some buy signals, you can improve your odds by just simply putting on our digital signal processing based moving average. So just go down to moving average, put a 5-period average shifted to the right. I like to make it 2 pixels wide, and then click DSP for digital signal processing. So if you see a currency that's gone up significantly, and especially if it's at or above the upper bands, wait for a 6 to 10 bar pullback underneath this moving average, and then for the bar to go above it. So you can clearly see there's at least 8 or 10 bars underneath it there. So the bar closes above here, you'd go long, you'd have a small loss. From the high, it's already met the 10-bar pullback, so as soon as it goes back above here, you would get long again here and make a little bit on that trade there. Now, the FX build your own trend on here, I do not use or wait any of the longer time frame trend because I want to have a much faster build your own trend on here. This has a 0 weight for the daily, weekly, monthly. So if you are using the new version on your existing charts and you don't want to have to set up your workspace again, right click on the charts, and for every build a trend histogram, make sure that the weights are not more than 100%. If they are, then you're going to have screwy numbers. It's just as easy to build a new workspace with all of our sample new and updated charts as it is to go and fix the weightings on all the past ones. Every once in a while we find something that's radically improved, such as putting in the daily, weekly, monthly weighting on this. Some people might prefer not having the 15-minute, hourly, daily, weekly, monthly under here, and the longer-term traders might want to just have one indicator that takes into effect all the different time frames. Today, the euro is up on all time frames. So on the individual charts, I like to kind of see that. I'll be more aggressive in buying when I see currency it's up on all the time frames. And also on this pullback right here, you can see it had pretty much the most weakness than it did for the previous 5 hours. So anytime weakness comes in, kind of wait. It doesn't hurt to wait and see if currency is going to make a lower low. If it goes sideways for a while and breaks out, take a buy there. It's a little bit higher probability. This can prevent you from taking unnecessary losses. I have yet to put the real-time tools into these FX trade signals. So when this gave a buy signal right here, it didn't know that it was weak, but you do. And it didn't also know that the currency had gone up, up, up. Anytime you've had 3+ waves up, wait for a little bit more of a pullback. A lot of times it makes a move down, and then another move down, hits a fib target, and then continues its trend. In this case, it went down, up. You can see that up move had no strength, down again with a lot of weakness. The weakness kind of subsided right here and went sideways. When it breaks back above that little sideways range, after all these buy signals, you get in, and it's just taking off to the upside. Right now, if you're in a trade, notice it's pegged at 100%. The euro is going up against almost every currency. The dollar is going down against every currency, and it's doing so with incredible intensity. So that's why you have this extreme strength right here. And that's how you use our tools. I think you will be very happy with the new build your own trend tool that has and factors in the 15-minute trend, hourly trend, daily, weekly, monthly. to a smaller extent than the real-time fast tools. It's still very fast in showing trends, and this is used really mainly to identify the best currencies to trade, and then you can use much faster tools on the individual charts that do not have the daily, weekly, monthly in it to make your determination on the final trade.